morning. You're watching the markets on ET now. I'm Anisha Jain. With me is Nikunj Dalmia. And for now, there's a bit of a recovery on the screen, and that's expected to continue. At least that is what the implied open is suggesting for the GIFT Nifty at the moment, that we are likely to open in the green just around the 24,300 mark as far as the index is concerned. Remember, we have seen a swift recovery of over 900 points since November 21st. A solid 4.2% recovery is what we have seen from lows that we had seen on November 21st. And from there has been that FII outflow which is reversed. We have finally started seeing early signs of FIIs coming back to India. Let's see whether that recovery sustains or not. It's been led by PSU banks, which have been doing the tricks. IT, real estate, these are some of the other packs which have been doing well. The BSE market capitalization has added almost 15 lakh crore rupees since November 21st. So let's see whether it continues or not. But for now, the global cues are also supportive, at least what we've got overnight. We got the PCE data, which has come in line with expectation at around 2.3% as far as the PCE is concerned, and 2.8% when it comes to core PCE. 65% of the participants are still believing that there is a rate cut further, the third one at that, which is there in the month of December. The inflation has been cooling off, but maybe the slew of rate cuts will continue. GDP continues to be strong at around 2.8%, and the other good news is that it's one of the best months that US has seen this year, even though there was a bit of a moderation that we saw over the last couple of days, and that's because the volumes are on the lower side because of Thanksgiving and the other festivities that come underway in the United States. But overall, Nikunj, looks like it's getting better. I mean, the geopolitical news, the US dollar cooling off, all of that is positive.
See, Anisha, Indian markets have really moved independently of what's happening in the world. So that really is not the factor which is at play. There was just no reaction or action to what has happened to the Fed. There is no real pattern which clearly has emerged in last couple of days, how global markets have moved versus how Indian markets have moved. For me, I think the trade setup which I've been calling out in the month of December is very simple. No news is good news. And I think December is all about no news. We've been bombarded with news, global cues, election news, movement in dollar index, China comeback, impact of Trump 2.0. All those factors are missing in the month of December. So by and large, I feel that markets have digested a lot of global news. The Trump comeback trade seems to be topping out, and the quit India trade by foreign institutional investors, that also seems to be stalling a bit. I think we are in for a good December, and the way how markets have recovered from last Thursday's low to now, there is a fair degree of logic and fair degree of a fair degree of commitment levels which seems to be making a comeback. So I'll say it again, sometimes no news is good news, and that I think is evident. The good bit for us is that we've made a solid comeback of 1,000 points plus. It's a respectable rally, and markets are moving as per the script, which is they're simply consolidating.
Okay, yes, and we can definitely do with some less amount of news. It's been quite volatile, right, over the last couple of months with the slew of, announcements coming in. Finally, perhaps we'll see a bit more somber December is what the expectation is. But yes, the recovery has been underway for the fourth straight day as far as the Indian markets is concerned. Yesterday also we managed to close with the gains. Broader markets also continued to party along. Nifty Energy was up around 1%, metal gain for fourth straight session, and then there was that heavy lifting coming in from HDFC Bank, Axis Bank, that did well. But on the other side, Nikunj, it's pharma that continues to kind of decline a bit. But overall, I think recovery as far as the banks and PSU banks are concerned, that's the highlight.
See, Anisha, you may call it the Modi rally, you may call it the outcome of Maharashtra state election. The bottom line here is that PSU stocks, which in a sense had really fallen and they really had got pushed into a corner in the month of October and November, they are the ones who are really making a comeback. I don't expect a very universal rising tide phenomenon which could be at play in some of the PSU banks. I do expect in PSUs, but I do expect that selectively within PSUs, you will see a lot of classification. So I expect PSU banks and PSU power dominated themes to do well. Railways, defense, PSU metal stocks, I think they will take a back seat. PSU banks, why? Because the numbers were strong. PSU banks, why? Because they're still very cheap. And the earnings trajectory, which is a combination of credit growth and NPA cycle, that is headed in the right direction. So PSU stocks are cheap. Markets are looking at rotating. The rub-off effect of what is happening in some of the large banks, I think, would be visible, at least in PSU banks. So that's one trade. Power, anything which has got to do with green, clean, power, power utility, I think those stocks are not very expensive. Growth in the near term is looking visible. Stocks have corrected enough. NTPC debut was not a table thumping one, but was a decent one. So I think PSU banks and PSU power related themes, even for that matter PFC and REC, I think those stocks are looking interesting. So if you really have to look at this entire PSU comeback, you want to stay with, let's say, PSU power financiers, PSU finances, PSU power dominated themes, and PSU banks.
Okay, PSU clearly is the theme, but don't forget IT too. The Nifty IT index is actually sitting at record high levels, and stocks like Tech Mahindra is just 0.6% away from life highs. Infosys is less than 3% away. And if you look at the 52-week high stocks, a lot of them actually feature in from the IT vertical. So Persistent, Signity, Coforge, many other names. So IT also doing quite well in the trading sessions of late. But today's expiry, monthly expiry at that, so will be interesting to track how the Qs really pan out for the Indian markets. But off late, what has been making a lot of news flow is also the Adani group of stocks. That clarification coming in that as far as the US indictment case is concerned, no bribery charges have been formed against Mr. Gautam Adani, nephew, as well as Mr. Vineet Jain. So that is something that really kind of gave the confidence back to street, and that's the reason we saw smart recovery coming in across all Adani group of companies, whether it was Adani Power, Total, Enterprises, Green, and even other names. So definitely a bit of recovery at play there. But Nikunj, what do you make of this one? Has been volatile. Any recommendations or suggestions as to how investors should be navigating through this much volatility?
See, you'll have to go with the news flow here, Anisha, because there is no point in preempting and prejudging what is coming next. I mean, nobody saw this kind of an indictment news coming. And then after 48 hours, and then you have the clarification, which of course has come from the Adani group as to how really the group perceives this entire US court indictment news to be. So you'll have to stay with news. My limited point here is that you have to look at the long-term picture here. And the long-term picture for Adani group of stocks, I think, is very simple. This is not 2002 or 2003 where there were concerns and genuine concerns which were centered around debt. I think the group balance sheets across companies, they are in a much more formidable position. Their cash flows are predictable. They have real assets. They've really got a lion market share in port, lion market share in operating or managing airports. So it's a group which in a sense is on solid footing. Now in the near term, what happens to price, I think, is a function of volatility. If 2002 experience is anything to go by, for those who bought the volatility and the ugly fall in Adani group of stocks, I think they've been very handsomely rewarded. So I'm not sure if we are in repeat of the same, but looking at the way how the stock and the price action has been yesterday in some of these stocks, it is a clear indication that in the near term, the downside seems to be getting arrested and the volatility, I think, is here to stay. It was a straight line fall. It's been a good recovery. Will they continue to regain the levels from where they reversed when the US indictment news came? Maybe yes. There are some businesses which will remain independent of what the news has come out, especially the cement business, the media business, the FMCG business. So those stocks, I think, would be the first ones to recover. Where there is a bit of a gray area in terms of how the news flow could be, those are companies like Adani Green, where you should expect more volatility. But the comeback, I think, in some of these stocks, I think, has been nothing short of unreal. And that really brings me to that other point, Anisha, that when I say that, look, what has been thrown at the market, China comeback, FI selling, poor earnings, lackluster your festival season, news from Adani. There is nothing positive which has come out for the market. The only positive news which came was over the weekend, which markets liked, was the election outcome. And look at the market reaction. So this market has been hungry for good news. And when markets react to a little bit of to any sort of good news which is more like a sentimental booster, not earning booster, that just tells you that the markets in a sense have digested all the bad news. Compartmentalize the market between October and November, and I'll just say the list again. Trump comeback, earnings downgrade, ruthless selling by FIs, China made a comeback, lackluster festival season. Am I missing on anything? Maybe one or two things more.
Strength and all of that, but that's
But
part of
the markets have really made a bottom, and we made what Kunal I think would take it forward is what is called as a classic bottom. It was made because of fear. It was made when markets are oversold, and when markets are coming back, it is not like a bout of short covering. It's a rally, and then you are consolidating. You really want to see that. You want to see that base. Like you say in Hindi, market ki neev ban rahi hai.
If you like this video, then like, share and subscribe to ET Now.